Alright, so it looks like this property doesn't even have any rents on it advertised, so we don't know what this property is earning every month. So let's move on to the next one. 204 Serrano Avenue, like the chili pepper. Oh, by the way, my name is Rajesh. I am a direct lender specializing in 2 to 8 multifamily buildings in the Los Angeles area. And right now we're going to focus on this 4-unit in Koreatown. So this is promising because price is under 1.2 million. Rents are $90K. The cap rate is 4%, 4.74%. But once you start increasing rents, you can get it up to 7.56. Now, I was mistaken. This is a pro forma NOI. This is the NOI currently as is. So just by looking at these two things right here, it's based on just past experience. It's not looking good for this place. But if you know you're going to buy it and raise the rents, then this might work out for you. So 1195, and there's a 4-unit. It's at 100% occupied here, and NOI is 56,642. Let's see if they list anything about gross rents here. No, they don't. So only thing I can really do is sort of guesstimate backwards, knowing that. So we have, 56,642 divided by 12. This is our net operating income, and we're going to add back in the property taxes and the landlord insurance. So 12, let me do that again. 56,642 divided by 12, 4720 plus 1245 plus 133. So we know that gross rents at minimum are $6,098 a month. 6098, 0 here, and then we're just going to go through and zero all this out. That gives us 4720, right? Minus 1245 minus 133 times 12, 56,642, so 4720. That is correct. Let's see. We got to put down 44% just to hit a DSCR ratio of 1. Here you got to put down 53% or $112,000 more just to get a bank loan on it. If you go interest only, you can save yourself about $100,000 at a 1. Let's see what this looks like at a 6% interest rate. So we know we're not getting a 6% interest rate unless we hit like a 1.1, 1.15. So let's see, 1.1. So you would have put down 30% and a down payment of $362,000 just to cash flow $555 a month. That doesn't seem, it works. This is what it would take to underwrite this building, just to buy this building, but it doesn't seem like it would cash flow right from the get-go. So now let's use a pro forma NOI. which is 90,325. What happened then? 90,325 divided by 12, 7527. 7527 plus 1245 plus 133. That's 8905. 8905. Everything else stays the same. Now your net operating income is $7,500 per month. Let's go back up to 7.5 just to see here. So at the minimum down payment on a DSCR loan, you're looking at, on a 4-unit, is 20% down. So your down payment is $240,000. Your cash flowing $842 a month. Let's see what happens if we take it to the same as the other one, as a bank loan, right? Let's just try 1.2 then. So you're still cash flowing more with us, but that's because you put more down. You put $40,000 more down. To get a bank loan on this, you're going to have to put $300,000 down, and you're going to be cash flowing $1,200 a month. So let's see that from an investor's perspective. 298,750 divided by 1260. 237 months divided by 12. So 20 years just to recoup your initial down payment, not counting repair costs, rehab costs, etc. So that's the challenge with cash flowing in LA. Let's say you want to cash flow $3,000 a month, right? So now you have to put down about $500,000, or close to 50%, 46% down, as you can see. And that would give you $3,000 a month. Now, what's the benefit of doing that? Well, obviously the cash flow. But let's say you divide that by the cash flow that you're getting. How long will it take to recover it? 182 months, which again is 15 years. So you're looking at 15 years just to recover your $500,000 at $3,000 a month. As an investor, you have to ask yourself, if I were to take that same $500,000, $550,000, and put it in this building, I'm getting $3,000 a month back, but I can take that $550,000 and put it in this other building and get maybe $6,000 a month back, or $10,000 a month back, or $20,000 a month back. Then that's how you start to evaluate your investments. This is mainly passive. The more passive something is, the less return there is. And even then, when I say passive, it's a relative term, because being a landlord and owning rental properties is not a passive income stream. Yeah, you own the building, you have to send you checks, but you're going to have to deal with evictions, you're going to have to deal with late payments, you're going to have to deal with repairs. You're the one calling it. And if you have a property management company, that's included in it, but then that's taken out of the rent anyway. And if you're saying you want to make $3,000 a month on this property, guess what? You're probably not hiring a property manager in order to make this work. So, welcome to cash flowing in LA.